Hello everyone, this is Alejandro Cremades, and today we're going to be talking about what are pre-seed rounds of financing. So pre-seed financing rounds are super important. They're in essence the first early stage rounds that you're going to be doing for your startup. In essence, in the video today, we're going to be covering it. We're going to be really breaking it down for you so that you really understand how to nail it for your own business. So with that being said, let's get into it. So first, let's start with a quick guide into financing rounds. So everything is going to start with really putting that house together. Everything is going to happen with the pre-seed or the seed round. Essentially, that's the money that you're raising for really getting, like the first things in place. Then you're going to go 18 to 24 months into the Series A or perhaps a proper seed round. The proper seed round, basically, they're going to be expecting that you have the team, that you have the minimum viable product, essentially something that is working already in the market. And then you go into a Series A 18 to 24 months later, where essentially you're already pitching to sophisticated institutional investors like venture capital firms, where you already have what they call product market fit, which is validation that there's a clear need for your product or your service in the market. Then 18 to 24 months after the Series A, you're going to go into a Series B round of financing. The Series B is essentially grabbing what you are doing that already has that validation of product market fit and essentially replicating it on a different geographic location where those investors that you're bringing in have a good network in order to replicate and scale and grow. Then 18 to 24 months after that, you're going to go into the Series C and beyond. And what that means is just doing more rounds of financing in order to get to a liquidity event, which is that moment in time where your investors are going to receive their returns for the investment that they made and their money back. And that is going to come in the form of an acquisition, a secondary sale of shares, or an initial public offering, aka IPO. So that's very much the way that rounds of financing work from financing cycle to financing cycle. So what are pre-seed financing rounds? So in essence, pre-seed financing rounds are just like the name suggests. They are the pre-round to the actual seed round. Essentially here what you're doing is you're raising money in order to cover the essential cost. That could be incorporating the business, hiring certain team members that are critical, or maybe certain things that you would need to actually spend on the actual product or service that you need to develop. So who funds the pre-seed financing round? So obviously pre-seed financing rounds, they're very, very early. At this point, it's really people that love you. It could be friends, family, it could be colleagues that you have from work, former bosses that you had that have the money to perhaps give it to you. And also you need to make sure with them that you're setting up the expectations so that in case that you lose their money because it's very high risk, they are going to not get mad at you. You're going to be able to continue to keep that relationship. And in essence, they need to have those clear expectations. Not that this is going to be the next Google or the next Dropbox, because that's how you destroy those relationships. This is people that are investing because they love you. And that's why you really want to make sure that you're nurturing that relationship and not destroying it. Now, there is other types of figures or other types of investors that you can really bring in to invest in your business. Some of those investors could be the following: individual angel investors, a select few of pre-seed startup accelerators, grants and winnings from business plan competitions, bootstrapping using personal saving and credit cards, loans and debt financings, donation or reward-based crowdfunding. So raising really money at the end of the day, especially if you're very, very early stage, you need to make sure that you're not just raising to get by or just for the specific amount of months that you think you're going to need in order to really get up and running, because things are always going to be, or perhaps not going the way that you anticipated them. I always suggest and I always recommend to startup founders that you prepare for the worst and that you hope for the best. So what I mean with this is that you may have some unexpected costs, like it could either be legal or it could be marketing. So if you're, for example, looking at raising 18 to 24 months, maybe you give yourself a couple of extra months just in case that you have some cost that you had not foreseen that were coming your way. So what do you need in order to raise a pre-seed financing round? I mean, in essence, a pre-seed financing round, as we mentioned earlier, is people that are going to come in and invest because they love you. Now, there is other instances where you have some exciting things that you have put together in order for them to really fall in love with the opportunity, with the initiative, and to actually give you the money. So some of the things besides, because again, you're just at the idea stage, some of the things that you could do to really create that excitement, to make them fall in love with what you're doing. Some of this could be the following: tackling a significant problem, going into a really big opportunity, a market size that is booming and growing rapidly, to have the right timing, to have done your homework and research, theory of a profitable business model, a strong and capable founding team. Now, above this is really all about the team. I mean, you need to really convince the investor that not only you are the right individual to really execute on this, but that you have that capability and those skill sets that you can apply so that you can adapt to whatever the market is asking. And this goes not just to you, but then also to your co-founders or to anyone else that could be part of that founding team. So some of the things that you can do in order to really prepare for a pre-seed financing round or to really tackle that pre-seed financing round in the best way that you can is a couple of them. So the first one is essentially that you want to make sure that you can raise all the money that you can. There's some people that say that you should raise all the money that you need. My recommendation is that you raise all the money that you can because you're not able to really time the market. You don't know where the market is going to turn around on you, when the stock markets are performing poorly, which is going to make dry up those potential investments in startups. So that's why whenever you're offered money, just take it, even if that means getting oversubscribed, which is meaning raising more than the money that you anticipated to raise. Then the other thing that you want to do is that you want to really nail it on understanding the right investors for your business. It's not about the money, it's about what's behind that money, who is giving you that money, and how can you leverage their knowledge, perhaps their expertise, or networks in order to get to the next level much faster. So here you want to understand that that investor is in it for the right reasons, that they're clearly aligned with the mission, with the vision of the business, and that you are equally excited with them to really embark in this journey together. So I would love to hear on the comment section below how you're planning about raising your pre-seed financing. Also, like this video and subscribe to the channel so that you don't miss out on all the videos that we're rolling out every week. And also take a look at the fundraising training, which is the program where we help from A to Z with everything related to fundraising. There you'll find templates, agreements, live Q&As, a community of entrepreneurs helping each other all over the world. And essentially, you'll find tremendous value in it. So thank you so much for watching.